Do you want to dominate the markets? In that case, with our technical tools, you will get an unrivaled advantage in the markets. We'll show you at today's USD trade. Forget about your trading gurus and their subjective strategies. Does it make sense to draw various subjective zones, order blocks, and fair value gaps on the chart, and then build a long-term profitable strategy on the subjective zones that you drew on your chart because you thought that the price would react there? You are very mistaken. Your strategy sucks. We will show you why you should use our tools from professional traders. The difference between your guru's strategies and our professional tools. Our tools is based on data and completely backtested for long-term years. Our tools automatically draw real-time high-volume zones that are currently developing and historical zones to which the price has not yet reacted. We call these zones historical value zones. You will also forget about the subjective drawing of your liquidity points. With our tool, you will very quickly get an overview of where the real liquidity is on the market. It also generates AOI zones that serve as entry points. These AOI zones are based on backtested data. With our framework that focuses on backtesting strategies, you can test your mentor's strategies to see if they are lying in their videos about their profitability. Some gurus can tell you that they have a back-tested strategy that they made manually and showed you some percent in the documents. It should not be forgotten that these strategies are back-tested by subjective views of the market and not by real objective data. We absolutely beat all trading gurus in this, and that's why they hate us. Let's show you how to absolutely dominate the USD pair. Let's go on a 5-minute time frame. Wait until the price reacts to our volume zone. We are confidently waiting for the creation of an AOI zone serves as a confirmation of market entry. We target all liquidity points on the market. As you can see, you could add a beautiful 5R to your account. After removing all the liquidity, another AOI zone was created for us. Let's take a look at the delta divergence. What is delta divergence? Delta represents the difference between aggressive buy orders and aggressive sell orders in the market. Positive delta means that there were more buy orders than sell orders in a given time period. Negative delta means that there were more sell orders than buy orders. Types of delta divergence. Bullish delta divergence. Price creates a lower low, but delta rises or forms a higher low. This means that even though the price is falling, sellers are becoming less aggressive and buyers are starting to gain control. Possible reversal to the upside. Bearish delta divergence price forms a higher high, but delta decreases or forms a lower high. This indicates that even though the price is rising, the declining delta shows weakening buyers and a potential reversal to the downside. Now we are clear about it. After creating AOI zones, we see that in our case delta divergence has occurred, which serves as our confirmation of market entry. We enter the AOI zone and target the main point of liquidity and our volume zone, which in this case serves as a price magnet. We added another 6R from this trade. As you could see, you can achieve this only with an objective view of the market, which is offered by technical tools from Influxum.